Thank you so much.
Thank you.
All right.
Yeah, no problem.
All right, me again, sorry. All right, thank you everybody for being here, and thank you, Emilie, for joining us. So Emilie Gallagher, you're the Global Head of Financial Markets and Industry Products at Bloomberg. Thank you for,
thanks for having me. Congratulations on the announcement. That was great to hear, and the use case is really compelling. So I can start with maybe a bit of what that means in terms of what I do at Bloomberg, and then how I fit in here today. So as you mentioned, I look after financial markets and industry product at Bloomberg, and what that means is we are responsible for the data analytics and applications across asset classes. So if you're a Bloomberg user, you can think about that as the yellow keys. So you've got things like your F8 key, which is equities or commodities, funds, indices. And so our teams are responsible for those asset classes and then how we support those asset classes across the terminal, but also our enterprise businesses. We're also responsible for industry, so that's things like alternative data, supply chain. As part of that responsibility, our teams also carry our digital asset strategy. And I think that came out of our FX business. I think a lot of people, as an extension of FX, became the crypto experts at their firms. And then as an extension of that, became the digital asset experts at their firms. And that was kind of our journey as well. But it's certainly not a side initiative for Bloomberg. We have certainly been building teams and have really elevated it to a firm-wide strategy. So our teams focus on that. We think about how do digital assets show up in our existing products and services, but also as infrastructure gets built on chain, it could create new exciting opportunities for us to think about new products. So that's how we fit in here today.
That's amazing, and I loved what you said about introducing a lot of businesses and then digital asset being a part of that. And I'm sure I see a world where we're going to talk about equities being a part of digital assets. Yeah. There's going to be a day where it's going to be even bigger.
There's tons of crossover.
But in any case, I mean, Kaiko and Bloomberg, we've been working together, I think, since 2017 or 2018 when we started working on, back in the days, financial instruments, global identifiers, or FIGIs, which are like data standards, taxonomy things for data management. And so Bloomberg has been, working and thinking through digital assets over a long period of time, taking obviously a very data, responsible and standards and industry standards approach. But it's definitely been something you've been at the forefront of, and you personally leading the charge at Bloomberg. So you mentioned, crypto and digital assets in general is not a side initiative. So what is it?
Yeah, I think for Bloomberg, we're always grounded, like many of our peers, on where we see client demand. And I think that what we're hearing from customers is that use cases are moving from being experimental to kind of real workflows on chain. And so that, for us, is a moment of reflection to figure out how do we become part of that. So I think the shift is really clear. Institutional finance is moving on blockchain rails, and Bloomberg wants to be where our customers are building. And so that's really what drives us in terms of how we think about this space. We have 5 strategies. I'll try to get through these quickly. Our first strategy is where we've worked together recently, but that's about bringing Bloomberg's trusted data on-chain to be distributed in on-chain environments for things like tokenized workflows. And so we've recently announced a partnership with Kaiko to use their infrastructure to bring licensed data. So if I'm a customer and I'm a Bloomberg customer and you're a customer, we're able to bring that license data to us within, smart contracts or application use cases. So that's really exciting. We've seen a lot of clients be interested in that, and our initial focus is on enabling that in the Canton network, which is where most of, at least the customers that are interested in the solution are. The other thing that we are spending a lot of time thinking about is how do we think about on-chain applications and workflows. So it's not just about bringing the data, it's also thinking about things like trading, risk management, collateral management, like we've been talking about over the last hour or so. So how do we bring that utility, our products and solutions that we have off-chain, how do we build that capability on-chain? So we're really excited about that area. The other thing, I think this is probably where we spend most of our time, at least now, is tokenized RWAs and evolving market structure. So clients expect for Bloomberg to be there for them as things evolve. So that means for us, tracking the momentum of tokenized assets, whether it's in funds or indices or credit or equities. It also means, though, keeping up with the pace of how the market's evolving. So things like 24/7, real-time settlement, new liquidity models. And for us, we have to think about how do our Bloomberg data models, how does our infrastructure scale to these new market structures. The fourth pillar of our strategy is, I think, what is kind of our bread and butter, which is bringing transparency to the space. So we have a motto, this is Mike Bloomberg's motto, but if you can't measure it, that you can't manage it. And so just like when our clients are looking at companies, they're not satisfied with just the price of Apple. They want to know things like how many iPhone sales have they sold last week, because that's a key KPI, and we think this space is no different. Clients are asking, what does adoption look like? What are flows? What is real usage? And so you'll start seeing a lot from us in that space, and both building on our own, but also partnerships. And then finally, crypto is an asset class. I think that story is pretty well understood, but it's becoming a much bigger part of people's portfolios, and so therefore, we need to provide benchmarks pricing. It's where we started. In addition to Figgies, we also rely on Kaiko for a lot of our pricing, really offering that institutional grade aggregated pricing. And our teams had spent time breaking our backs trying to code up to all these exchange APIs. And then we met Kaiko. And so we decided we didn't need to do that anymore. So we didn't have to take a build on your own approach. We could partner with someone like you that was really doing that at scale.
I love that you introduced by saying that digital asset was a small scope of everything you're doing, and then you're doing all that. So I don't want to imagine what is all the rest. But I think what you just said is very important. The distinction between crypto as an asset class and then all the RWAs, tokenization, blockchain as an infrastructure. Like it's easy to talk about like crypto blockchain without really defining terms. And so there is crypto as kind of a native asset class that is the crypto instrument used on a blockchain that is used to pay transaction fees and like the Bitcoin and the Ethereum networks. And then there is a kind of, quite a big gap in terms of the asset class when we start thinking about tokenized assets that are actually just traditional securities wrapped into a different technological wrapper, and that will benefit all of the great things that blockchain bring when it comes to composability and smart contract logic and DeFi, et cetera. And so, these are actually two very different things. It's two different asset classes, but wrapped in the same technical wrapper in some way. So increasingly, we talk about this TradFi DeFi merge. There is crypto becoming an institutional asset class, as in crypto asset being wrapped in traditional vehicles, such as a Bitcoin ETF. And there's also traditional assets being tokenized on chain and just being treated like a traditional financial asset on a blockchain. So the convergence is not so much as a merge of those two asset classes, but rather one asset class going to a technology stack and then one asset class going to the old FI technology. How are you thinking about this convergence, and how do you split treating digital assets like, is it a crypto or is it
Yeah.
is it an RWA? Is it a TradFi or is it a crypto or is it a new type of asset that is TradFi with a crypto wrapper? How do you approach these things?
I mean, I think the success for us in this industry would be us not talking about the convergence because it's just been converged. But there's bi-directional flow, I think both ways, taking the best of both models. When we think about investing and where we make investments, we're super deliberate about those investments. And so when Bloomberg decides to go into a space or we decide to carry something, for example, on the Bloomberg terminal, let's say we decide to put prediction markets on, which we do have prediction markets on the terminal, that carries some weight to it. And so we're really thoughtful about how we think about how we show up. But thoughtful doesn't always mean slow. I think sometimes people think because we're thoughtful that sometimes we're conservative and slow. We certainly, as we see real client demand for these emerging use cases that you describe, we have the scale to move really quickly. I think there's some principles that guide us, though. The first, which will be no surprise, is that we are always institutionally led. And so where I think the standards in this space, just because you're on chain doesn't mean you lower your standards. And so we're really focused on an institutional lens to take the consistent standards that we apply to any asset class with that same rigor. And then finally, I would say the other thing that we think about is connectivity. We don't try to pick winners or losers in this space. We just try to provide the access where clients see the most opportunity. And so that's another kind of key principle for us is really unlocking the value through connecting wherever we need to be.
Yeah, and I mean, I still remember the early conversation when we were talking about the early scope of what crypto assets would be covered in the original Bloomberg terminal coverage for crypto. And I remember thinking like, and that I think was your stance, was Bloomberg is the biggest data company in the world. You have an impeccable brand. Like you don't want to endorse, like anything you will do will kind of be perceived in some way as
whether we like it or not.
Whether you like it or not, as a validation of something. But I loved what you said about being extremely thoughtful, but not necessarily being slow, which is, I think, what you've proven with crypto markets, but also with recently prediction markets. Like that was a deliberate move that you did very fast, and that like you actually had some very fast followers and a lot of endorsement from an institutional standpoint of prediction markets. But here is something where you kind of moved surprisingly fast for such a big institution. And we're actually very, very thoughtful about it. And very
We've actually covered prediction markets since 2016.
That's crazy.
So Predict It and some other people in this space. But you're right. Like when we carry a crypto asset on the terminal, we have a methodology and it's transparent to customers. So they understand, okay, why is this cryptocurrency on CryptGo, which is our kind of landing page for some of the most liquid or most active crypto assets. And we take that same approach to prediction markets. So we have a methodology of what we do cover and what we don't cover. But it is always grounded by client feedback. So we're constantly consulting with clients. And they're really the ones that kind of guide us. Plus, we've got our own principles that we try to adhere to as well. But yeah, we're pretty methodical in our approach, as people would expect us to be.
So actually, you gave me the perfect segue into the next question, which is you recently added the Canton coin to the terminal. Yes. And we've just done this announcement for this partnership with Bloomberg, where we're helping you distribute to the Bloomberg licensed client access their data on the Canton network. And so obviously, I'm curious to hear you talk a little bit about why Canton from the eye of a data provider, like what kind of security it brings you. Because
I mean, I think there's been a lot of conversations about Canton. I think for us, why Canton? That's where our clients are building. Or that's where they're telling us that they're building. And so they're looking for the same Bloomberg data and applications to be carried with them in that environment. And I think if you think about some of the why behind that, it's really the marriage between the privacy and the connectivity that the Canton network allows for. So that's where we're starting, but it's certainly we'll scale wherever our clients really see the most amount of value. But when we think about our partnerships and we think about who we partner with and when, there's some common threads that I would say apply to Kaiko as well, which is, are we aligned on incentives? Are we aligned on our standards, particularly around data integrity and governance? And so that certainly is true with Canton. It's certainly true with Kaiko. My head of engineering, who is my partner, who is the head of engineering for financial markets and industry data, turned to me when you were speaking this morning and said, wow, she sounds just like us. Because you were talking about how important transparency was and integrity and all the things that are really important to us. So when we think about partnerships, we're really grounded on who really shares the same ethos. And I think that's often driven by this institutional client need and what features are appropriate for their use cases. Yeah. And so that's why we've been leaning in there.
Yeah, and I'm fully aligned with what you said earlier about data. Like, price data matters. What is the price of a security? But all of the alternative data, all of the data that you get in order to be able to understand an asset, in our world, it's more going to be liquidity and market depth and market microstructure, price fragmentation. Crypto is a very interesting asset class. It's a bearer securities. It trades on hundreds of different exchanges at the same time. You have huge price fragmentation, price dislocation. So understanding or even creating a benchmark for the price of Bitcoin is actually not an easy feat. Yeah. And it does trade on all sorts of venues that all have different features, and not all exchanges are ranked the same. So for us, in order to build a benchmark or to give accurate data to our clients, we go through building exchange ranking methodologies, asset ranking methodologies. There's all sorts of components that are, the underwater part of the iceberg. Yep. That is so fundamental to understanding an asset. And I live that on a tiny, tiny scope, which is crypto, and you cover that for literally every asset class in the world.
Well, you do it really well, which is why we gave up trying to do it on our own. But yeah, I'm super excited about the types of metrics and transparency we can bring broadly to the tokenized ecosystem. When we think about our user base, we're not focused on the Cumberland team, although they're great Bloomberg users of ours. But when we think about building our product, we're really thinking about the users that are somewhere in the middle of their journey. And so I think we can play a really important role for the broader institutional client base, many of whom are sitting in front of Bloomberg terminals, to give them the data that they need to start seeing where real things are happening. And so we're excited about playing that role. Yep. And it's an important role that we've played in the 4 decades that we've been in business.
4 decades, yeah. And then there's something else that you said earlier, which is it's not just about just the data, but also the trading technology, and there's also some other aspects of Bloomberg that you're getting into more blockchain infrastructure and kind of, I guess, leveraging smart contract logic for your own kind of execution and trading operations. Is this something that you are in charge of as well and that you're working on?
We advise our team. So there's a business called Enterprise Products. That's where a lot of our trading venues sit in that organization, or order management, risk management. And so our teams advise those areas to help them understand how to think about this space. We are thinking very heavily about that. We have seen peers leaning in. And so you should see us, in the near future, kind of leaning in beyond the data to, really bringing some of those capabilities that clients rely on for us off-chain, on-chain. And trading is a great example of that.
The reason I bring it up is I think it's interesting to have such a giant company and influential company as Bloomberg be on obviously the data owner and distribution side of things, but also understand the actual functional logic of why this matters so much in the trading applications, and having that kind of dual view on, I have the data, I need to address this kind of growing demand of on-chain capital market applications, but also building those applications that need to consume the data, and seeing both sides, and I think it makes Bloomberg even more powerful in this play.
And I think we're seeing real challenges from a fragmentation perspective. And so some of these tokenized assets could have pricing from one source. They could rely on corporate actions from another source. They have identifiers from a third source. And that creates a lot of challenges from an operational perspective. And so I think being able to really embed Bloomberg's data in these smart contracts in the applications, whether it's a Bloomberg application or another application, I think is really going to unlock a lot of the value and get over some of the operational hurdles that we see.
And what you just said about price fragmentation is so true. I mean, there may be a world where you have prices of single stock equities as it trades on the NASDAQ, and then the prices of those single stock tokenized form of that same thing, whether it's tokenized through an SPV trading on Coinbase, Robinhood, like we will see price fragmentation increasingly with the initial tokenization of the world. Maybe one day everything is on chain and we fragment things, but for now it's going to be
we're seeing that now, and clients are really wanting to understand the price differentials across the board, so it's really important.
Amazing. Well, thank you so much. Is there anything you would want to close with?
Well, I would thank you for hosting this awesome conference. I think it's such an important time for us to have these conversations. So I would just close with a big thank you to you and the team for getting us all together here.
Thank you so much.
Thanks.
Thanks, everyone.